Well, we're back and we're watching your ag markets here, trying to see if the corn ever gets any traction today or not. Let's take a look at what corn is doing right now. And it is, well, it's starting to get a little bit. Yes, we have July corn now at 326.5. It's still down. We're down 1 3/4, but it's off of its earlier low by about 5 cents. And we have December corn, the new crop month, at 337.25. That is down 4.5 cents right now. And it is at 337.5, make it 4 1/4 higher as we speak. Now, when we get to the soybean market, we have to mention that we did have a notice this morning that USDA said we sold some soybeans overnight to China. It was a couple of boatloads sold to China. However, the thing was, we had rumors about a week ago where we had sold at least 4 boatloads, and that never did materialize. So how's the trade taking that? Well, we have July soybeans kind of confused about the whole thing. We're at 876.5. We're up 1/4 cent, and November is actually down 3 1/4 at 876 per bushel. That is still about 11 cents off its earlier low in the overnight gyrations that we had due to some comments that were made overnight. You do have to keep in mind the sales were for new crop soybeans. Now on the wheat, well, we had a turnaround in Chicago wheat after going lower by several cents. July is now 3 3/4 higher at 488 3/4. If we look at Kansas City wheat with the quotes from bar chart here, we have the July contract 4.5 higher at 435 3/4. Well, that's basically about a dime off of its earlier low. Now, Minneapolis wheat, though, on the other hand, it has really struggled. We're down 5 1/4 cents on July at 513.5. So let's talk with Brian Hoops of Midwest Market Solutions about what's going on. Brian, I wondered, first of all, how you and your clients are making it through all the weather here the last 2 or 3 days. I know you have offices kind of dotted all around the Midwest. What kind of reports do you get?
Yeah, good morning, Marlon. Good talking with you. You know, these our offices are saying most of the crops are in really, really good condition. You know, there's some dry areas that are showing up in Nebraska and Kansas, the western part of that corn belt, and especially where the hard red wheat states are grown. That's the driest areas, but most everybody else is seeing some really beneficial rains, a lot of good crops being reported. I've seen some of the, you know, I'm doing some drives over the weekend, and yeah, things are looking really good. Even in the state of Missouri looks much, much better than last year.
So where are we now when you look at the overall pattern here when it comes to a potential weather market on the corn? Is it not going to happen this year or what?
Well, yeah, you know, we're at about the point where we put our seasonal highs in for the corn market. Right today is about normally when it occurs, and that's because the market is looking ahead towards that pollination period. A large percentage of the crop is going to pollinate by mid-July, and so the forecast models now into early July look pretty beneficial. Not a real hot or real dry scenario is on tap. And that means the corn market needs to take some weather premium out of prices. That's why we're seeing December corn down 4.5 cents. In fact, this is the lowest level that corn has traded at since back on June the 4th. And if we close at this price, this will be the lowest close for the month of June period as we slowly take some of this premium that's been built in back out of the market. Now, we can put that in once again real quickly. There's a report a week from today that could give us a jolt as far as how many acres were planted. That could be another rally attempt, or it has to come from hot and dry type weather, because this weather pattern that we're currently in is beneficial for some big crop yields.
All right, Brian, we'll come back and take a look at our livestock trade in just a moment. We're talking with Brian Hoops, and we'll return after these messages. Come on back. Well, we've had quite a turnaround in the livestock trade. For example, let's take a look at our live cattle market, shall we? On the live cattle board, we now have the August contract up $2.67. We're at $97.80. Big gains in all the deferreds, too. October up $1.92 at $100.50. Wait a minute, that's over $100. Haven't seen that for a long time. All right, let's look at the feeder cattle market. And right now you have the August up $3.10. at 134.85, in September up 2.82. How about the lean hogs? Well, lean hogs, we have the July up 25 cents at 47.07, and August now $1.05 higher at 52.15. Let's go back to Brian Hoops. Brian, that cold storage report that came out yesterday Everybody said that'd be bullish for the hogs, maybe not so much for cattle. Well, what's the deal? The cattle are the ones running away today.
Yeah, I thought the cold storage was actually friendly to both of the of those commodities. Beef freezers, amount of stock down 13% from previous month. Pork stocks down 24% from the previous month. It's an indication that we're exporting a lot of this cold storage, and our exports are going to be key for this year. And I think that's what I thought was bullish out of this report. I was surprised we didn't have more of an immediate reaction. We were starting to see kind of a delayed reaction in here, and it looks like a lot of it is coming because the market has found some buy stops resting in this in market, and we took out some previous highs and then started to really take off and rally. So it's a delayed reaction. Stock market being sharply higher is not hurting the case either, as it would indicate better demand, better economic conditions down the road and into the summer months for both beef and for pork.
Yeah, the September Dow is now trading about 184 points higher, it says, at 26,137. Thank you, Brian, for the time. Brian Hoops of Midwest Market Solutions in Springfield, Missouri, joining us for a look at the markets at midday. Christina?